Hi everybody and welcome to today's presentation where we have the pleasure to present NNIT. To help us through today's presentation, we are helped by CEO Per Voss and CFO Pernille Fabricius. So welcome to you both. This event today will primarily cover the Q3 result you released last week. If I should read the headlines, and I know you'll get deeper into it, it looks like better growth in the KEP business, a good order book or bettering in that, and also margin starting to rise a little bit. So that looks like a little bit better result than we have seen, but still due to that you still haven't divested fully the business, still no guidance. But I think that was the headlines. I'm sure you will dig more into it. As always, you can ask questions in the box down below. Do it through the presentation. We will have all the questions in the end, but do feel to do it through the presentation. And I will also say, ask them in English, Danish, German, Swedish. I will try and translate to the best of my abilities. But for now, I will hand the presentation over to you, Per.
Thank you very much, Michael, and very warm welcome to all of you. During this session today, I will start doing a helicopter overview of the performance of the company, including the transformation time we are in. And then I will hand over to Pernille that will go through the business unit performance as well as the group financials, and then some final remarks and then do Q&A. I hope you think that sounds like a good setup because that's the one we have prepared. All right, let's get started. And to start with, we are in the process right now and have been that since mid of June of actually out of NNIT today, create two new great companies. And that activity started during the summer, but it has clearly intensified during the third quarter. And there's a lot of action and activities put in to making this happen. Where we actually create a completely new, or to a large degree, actually very new NNIT, where we are not operating together with the infrastructure business. Along with that, we also been doing another very important strategic activity, and that is actually that we are moving all our global delivery capabilities from China to the Philippines. That's basically or primarily done out of regulatory reasons. But there will also be positive financial impact as there are lower costs, and we've also been able to squeeze out some efficiencies from that transaction. That will be completed at the end of the year. The project is following its plan, even though during this quarter there has been some temporarily higher salary costs, perfectly according to plan, as we now are in the process of doing the knowledge transfer. So what will happen at the end of the rainbow is that we will have 400 new people-ish in the Philippines and 400 people less in China. But there will actually be some gains on that one because we're going to be a bit fewer in the Philippines than we were in China. On the financials, you said some kind words in the beginning, Michael, and I think they are actually well deserved because this was a quarter where we actually demonstrated that we are moving in the right direction. We are very far from paradise, to say the least, but clearly this quarter demonstrated that we are now producing a margin that is clearly better than the previous quarter. Especially now we did the 30 million before special items, while we were actually at the loss in the first two quarters. And also looking at the unit performance, it's especially promising to see the positive performance in what is going to be NNIT of the future, meaning our life sciences business and our CDS business. While you are in this kind of transformation that we are in right now, there's always a risk of being a bit internally focused to kind of look on your belly on all the internal stuff that is happening, the carve-out project, the transition of global delivery, and you kind of miss the focus on your client. That's why I'm especially pleased actually to report that this will be one of the better booking years in NNIT for quite some time. We have been winning a number of really important deals this year, actually the biggest one out in the Danish marketplace, while we are continuing to winning new smaller businesses around the globe in life science. But of course, I cannot resist mention the Nationalbanken deal, but also that we are growing our backlog by 37% towards the end of the quarter if you compare it with the start of the year. So that is clearly promising. And also the order intake, we won some great deals with Lantmännen and Unibake within our Microsoft business. And after the closing of the quarter, we were awarded actually one of the biggest application management contract in Denmark this year by providing the new student loan for the what's called the government for Agency for Higher Education, SU. But I need to be clear that we have been awarded it, but it's now in the kind of appeal period, and the final decision is yet to come, but we don't have any plans that is going to materialize. On a strategic update then, of course, I mean, we are now focusing and having a lot of dialogue with our clients and other stakeholders in order to bring this big transformation project to an end. So at the end of that journey, NNIT is going to consist of the life sciences business and the CDS business. And that project is progressing. It requires some government approvals, and there's a number of milestones that are to be achieved. But we are continue to work with that as was planned. On profitability, I mentioned briefly on my first slide that we have been demonstrating some improvement, and I think that's especially promising to see that we did some action, some defensive action in terms of taking out some excess capacity during the first 2 quarters, and you can see that actually now materializing in a better margins, especially in our CDS business, where the revenue grew 4%, all organic, while the cost actually decreased 5%. And if you add those together, you see that the margins in CDS actually materially picked up. But also in our life sciences business, you see that the growth, including acquisitions and currency tailwind, yes, but it was actually at a number of 20%. So I think that's really a very good progress. And then now already looking at the deals that is won that's in the bank, so to speak, it's going to be a great year. But there are also some important prolongations that's going to happen during the fourth quarter, which we're in right now. But I'm really positive and about that we will able to make those happen. So when we sum up the year at the end of December, it's going to really be a really good booking year, which I'm really pleased to see happening. Sustainability is, of course, extremely important for us as a company, our people, but also our clients. That's why we signed up to an initiative by an external organization to make sure that we will be carbon neutral. And there's a lot of activities which we will do where we have done already, but that needs to happen in the near future, in the coming years, actually, to make sure that we progress on that journey. And then we also communicated the strengthening of our management team, meaning that 1st of December, Pernille will move on to a role as Executive Vice President for our M&A, the transformation and strategy. And that we are welcoming a new CFO to the team, Carsten Ringius, who will start on 1st of December. With that, Pernille, I'm handing over to you to go through the financials.
Yeah, thank you very much. You almost did it for me, Per. We operate since the start of the year in 3 business units. The first one is Life Sciences Solutions, so it's the consultancy business. And this business is the one that in previous years had excessive growth, primarily outside of Denmark, and was driving the growth of the whole business. And what we have seen, as Per alluded to in the first 2 quarters, is not a lot of that. And that is sort of picking up. We have a 20% growth in total out of that unit, but organically is still at a 2%. So it takes a bit of time to get back up to previous levels. What we have seen is that there's been an assessment of the resources delivering the revenue in order to ensure that the utilization is improved to thereby enhance margins. And that is ever so slightly now positively impacting, and it's going to be quite a focus area, along with also price increases for the going forward, to ensure that this unit gets back up. Because the important thing here is that this is a unit that sits with the NNIT for the going forward, and what we internally call RemainCo IT, NNIT not being divested. What we are seeing, as Per said, is when we look at the order backlog, and in this case, this constitutes what's actually within this year already delivered and what's in the pocket. We can see that that's increasing, and it's increasing above last year. And that's a real positive, also because it's happening now towards the end of the year in sort of greater momentum. So there's a lot of good stuff happening in Life Sciences Solutions. If we go to CDS, this business is very focused on Denmark, as you know, and there we have definitely seen a pickup, which is also can be reported as quite sustainable. So we are seeing a growth now to the tune of 4%, and also quite a lot of wins within that unit, also with the SU being signed later this month, fingers crossed. And we also see, because of the adjustment of the delivery people earlier in the year, a pickup in margin, which is not insignificant. So that unit is starting to have a high utilization, and are also looking at that charge-out rate. So there's a lot of good stuff happening here. The final comment to this is that we actually also have a very good traction in the local China business. So that's good. And the backlog, again, defined as the revenue within the year, but also the add-on for the rest of the year, is picking up very well. So quite some good stuff on that unit. Moving on to HCS, so that's the majority. There's a little bit out of CDS, but also the full HCS of what we are carving out. This is a business that has been impacted historically by a lot of actually lost, in inverted commas, contracts. But we are not seeing that anymore. We are seeing the contrary. We are seeing quite a bit of wins, and also larger wins. And that's very good for that leg of the business, and for the remaining NNIT is of course also promising for the closing of the deal, so to speak, and also the financials behind it. We within that unit, and that's probably a question that comes to lots of businesses, we have an impact from the higher electricity prices, because this is of course the cooling of data centers that where we are hosting for a lot of blue chip companies. And here we have seen a bit of impact over the Q3, and that of course was some worry, but we are now also seeing the contrary, the energy prices reducing again. And so that's of course very positive. And again, sticking to the points here, you can see that also the order backlog is here increasing in here. So that's very good. So turning to the group financials, that I'm sure you've all read, you can see as a total, it was a 5.7% growth in Q3, and a year to date of 1.1. The 5.7 was driven by a lot of currency translating US dollar into Danish, and also acquisitions. But still, it's a positive development. And you can also see that the gross profit is keeping up, and the operating profit margin as well. Going to the special items, not to spend all of our day on that here, but the special items in the quarter are mainly related to the offshore change of the offshore location from China to the Philippines that Pierre alluded to. So those costs contain double costs and recruitment costs in relation to that, and they will fade out. We've had some questions that related to special items on our carve-out project, and how significant those were in the quarter. They are not extremely significant. The costs we have in relation to those are primarily consultant costs, legal costs, and the sort of that. And the costs that are going to be more significant are those that relate to IT, and also right sizing of organizations, but those you don't see at this moment in time. So and as a final slide for me, and then I'll hand it over to Pierre, because of the fact that this process with the carving out of the business has not been finalized, and because of the fact that the dialogues with the customers will entail that the remaining NNIT are going to potentially prime certain customers, we are not in a position at this minute to completely split the revenue of the company in the right buckets. Therefore, we are still not giving an outlook. We keep that suspended until the moment where we have that insight, realizing we are approaching the end of the year. But importantly, we are working very hard on this carve-out, whilst still growing the remaining part of the business to land, as Pierre said, at a place for 23, with a good infrastructure business being handed over to the other side, and a CDS Life Sciences business that's absolutely set for growth in 23. So with these words, I will hand over to Pierre.
Yeah, before the question, just some final remark. I mean, this last quarter of the year will be, of course, an intensive quarter to complete the carve-out, which we are working very hard to happen. We see that the momentum that we saw in the third quarter is continuing into the fourth quarter, which is very promising. It goes actually across all our business units, which is I think is extremely positive. And then of course, as Pernille said on the kind of guidance stuff, so I don't need to come back to that. So we promised you a presentation in 20 minutes, and now we are at 19 minutes and 20 seconds. I think we did pretty good, actually, Michael.
I think you hit the mark completely right. So let's jump to the questions. The first one is, when is the transformation to the new NNIT implemented? I think maybe we should split that into two, you know, still the carve-out process, and then I guess also your long-term strategic ambitions for, you know, having, you might say, the new NNIT with also without the carve-out.
Yeah. So as I said, we are in process with the carve-out. It's a very sort of professional process where we have a lot of tracks that are ongoing. For example, a tech and a HR and a client and a legal and so on and so forth. And I can say that they all run in accordance with our plan. There's sort of no hiccup. Having said that, we went out the 22nd of June and promised that this would last 6 months, and we are still at it. And the main reason for that does have to do with the sort of agreeing with the clients exactly how this is going to work. There's no alert to that, but that is taking a bit of additional time.
Yeah, and in parallel, we actually have already initiated a kind of strategy overview of the new NNIT. We call it NNIT 2.0, because I mean we have the starting point, of course, is the services of CDS and life science. We were looking on how we can combine that to potentially in an even better way than we have today, in order to scale up and drive growth and profitability. But also in terms of complexity in the company. I mean, this company is, I mean, the least the denominator is kind of the complexity in our infrastructure business. And when that now goes away, we are working also in parallel to see about how can we set up a company that is more adapted to work with more project and consultancy type of work. So that's quite a big activity that we do now in order to have something operational in the start of Q1. No drama about it. The people we have, the services we have, we're just looking on how we can combine that in an even better way to scale up the growth and also, of course, the profitability.
And I know it was a hard question I asked you, Per, because you would say you will always try to improve what you have, but looking at it, going out of maybe 23 or something like that, would it be a little bit more going business than transformation or something like that?
It's a very valid comment. What we tell the team, I mean, we don't have the luxury of telling the market, 23 is going to be another transformational year, and then you're going to see paradise in 24. We're going to refuel the plane while up in the air. But there will be some remains of transformation activity in the early 23. So what our plan is pointing at as versus the mid 23, we're going to have the tempo in our body that we're going to continue then during the second half. But that means that 23 would be a significant improvement versus 22, but it will not be fully perfect. So the full year with the right performance will happen in 24. But it's going to be a gradual improvement from day one in 23, and that will continue along the year.
Perfect. And then there's a question here: which countries are there good possibilities for growth? I think in the life science you mentioned abroad maybe, and in the other business maybe it was Denmark. So, but looking into the growth landscape, where is the biggest possibilities, and are you set for that? Meaning, do you have the right people in the right places?
Yeah, and the good news, it comes from all over. We have a really good geographical spread. By investing in NNIT, you really get the whole kind of word in that package, because we do have a quite significant business over in China and in Singapore. And at the moment, actually, from a geographical perspective, the highest growth we have in business right now is Singapore and China, not the least around the Shanghai area, where we have been investing in an office and we're growing a lot. But in terms of money, because the prices are low in China, so even though there's quite a few people over there, of course, the big growth potential is in the US, in Europe. And in US, we have both through our group companies, Alliance and Excellis, but also the NNIT core activities, we have a really niche position in the life sciences field, where there's a lot of investment going in, both to the big pharma, but also the mid-sized pharma, where we really have a good position. Going over to Europe, we are present in a couple of the big hubs for pharma in Europe. Not all of them, but in Ireland, and also through that connection to London, but primarily in Ireland, where there's a lot of business, special production established. We are there through SL Control and also through Alliance, and there we also through that have at least the satellite presence in London. Then we are in Germany. And the big pharma hub around Frankfurt, but also in Munich. And then we also present in Switzerland, around the Basel, where there's a lot of big pharma Swiss company, as you know. So I would say that outside Denmark, we have the geographical presence we need. We just need to bet on the right horses there, because we are not the biggest fish in the pond in the pharma technology, but we are big enough to scale and big enough to drive growth. And then also, last but not the least, in Denmark, where we have both the pharma presence through Novo Nordisk and other companies, but here we also have our other leg, which is actually primarily public sector presence, because as you've seen, we've done a number of important wins in public sector in Denmark. The last one we elaborated on, which was SU, and there are actually coming up some interesting cases along in 23, where we are really positioned to win. So it will be actually all across the board.
And then there's a question around the capital structure after you have divested the business. You know, are you going to pay down loans, keep loans, paying out something to shareholders of the sales divestiture, or keeping it as a war chest for purchase of M&A? I know, of course, you need to look a little bit into the future, but maybe some overall view on how your capital structure will look afterwards.
I'll take that one. So once this is closed, depending on where we land on proceeds, we are going to reset our capital structure, where we currently have a sort of a revolver around just above 1 billion. So we're going to firstly use the proceeds to set that to a different level, to a sort of a zero, and then ensure that there's a revolver and an acquisition facility to continue with. So it's going to be after this divestiture, it's going to be a quite prudent balance sheet that you're going to see, and you're also going to see sort of a tidy up in the cost base as a start, so that the company basically the remaining NNIT is ready to rock with a prudent balance sheet, a bit of revolver, a bit of acquisition facility, and quite provisioned to take off. If the proceeds are large enough to allow for dividend, we are definitely going to look at that. But as a start, that's going to be it set the company up for a very good future with the right financial structure behind it to support.
Perfect, thank you. And you touched a little bit upon it. You know, the divested business was not the best performing in this quarter, if you look at it. So, is there any changes in your expectation of the total sales price? What you announced when in the 22nd of June when you announced it. So, are there any changes because of business dynamics or performance?
You know, there are, so it's a good question. There are ups and downs always. There are energy prices going down to take the profit down. But then there are also contract wins to ensure that the price is there. There is a move on the offshore piece to take the cost down. So there's a lot of different dynamics to start at that. What we're looking at the moment is where we expected it to be in round terms. So at this very moment we don't have alarms in terms of that.
But another reflection on the HCS business, which is actually I'm quite proud of actually. I mean, I think I haven't looked too long back in history, but during the last couple of years, it's been a double-digit decrease in that business due to known reasons. And this year, during the first 2 quarters, the business contracted about 15%. And now we saw in the third quarter, it was only contracted with 2%. And we're actually looking into a potential growth scenario in the fourth quarter for the HCS business. So thanks to the large wins we've done, I think that business is positioned for a brighter future. Even though the plan is that someone else will reap the benefits from it, we're also going to get part of that, of course.
And then there's a question here: is the better margin primarily driven by cost cutting or taking down or is it the top line, or is it both? So what is the primarily driver in this quarter for the better gross margins we see?
I can start comment, and I think Pernille can put some flesh on it. But I mean, you see the power of billability utilization market. And I think HS is a perfect example of that. We had some excess capacity in the first quarters. Then we took some tough calls actually to take away some excess capacity. While we then, thanks to the wins and thanks to actually working offensive business, we managed to increase the top line. Then you see an increase of the top line by 4%, costs go down by 5%, then the gross margin goes from 8 to 20%. I think that's one good example, a good case study of this business. I mean, it's you need to be prudent on cost, make sure you have good gross margin, but then actually have the right capacity utilization. And of course, the most basic one, stay close to your clients and capture the opportunities out there.
So I think that pretty much captured this. One thing to add is that it's not really driven by price. So there's still an option to look into that, given the economy we are in with inflation and all of that. What the actions that were taken earlier in the year had exactly to do with right-sizing the capacity and really looking at that now that we were in a different top-line scenario. But then now that we are there, we can also look at the other.
And then there's a question here: do we have numbers on how much you utilize the organization, the capacity, percentages, or other measures? I'm thinking, trying to grapple how far along are you by getting you back to the higher margins? How much more is there maybe you can utilize and get the better margins?
I think that at our last call, I probably answered this. So what we have done, if we take life sciences, is we are actually quite prudent in terms of letting staff, in inverted commas, go in times where revenue isn't completely picking up, because these people are very educated and scarce. So that takes us to, are they now fully utilized? No, they're not at all. Is there therefore quite a lot of room for improvement on margins? Just talking about utilization, yes, within the life sciences segment. If we turn to the CDS segment, that's probably a little bit more. They are without mentioning anything, because we're not giving that number out, they are a bit more. That's a different situation. But on life sciences, and I think Pierre can take it on, there's a quite significant room for improvement, which also links with growth and then lifting that at the same time.
No, I think it's well put, so I think we rest with that.
And then the final question, do you expect to provide guidance for 2023, and then do you expect to have the kind of the picture that allows you again to guide on the continuing company?
Yes, so when we get to that, yes, we're definitely going to provide guidance for that. What the shareholders need to see is they need to see what's now being divested, and where did you land with the year in the continuing business, and what is it exactly that we are going to look into for 23 near term, and sort of into the quarters, and what does it take to get there. And that's what is planned to do as soon as possible, so that there's a bit of a firm statement on this that you can basically look at over the course of next year.
Perfect. That was the last question. Thank you to you, Pernille and Per, and thank you to the audience for good questions, taking us around in the investment case. May everybody have a nice day.
Thank you.
Thank you.